But what it's turned into, what it's completely transformed, is into one of these stock stories I believe that we're going to see a lot more of in the coming years, because this is a company that's kind of upended its entire operations with AI.
Right.
And in such a way that's different from, say, the chip makers or the data centers, in so much as it's not benefiting from the infrastructural build out of AI. It's not a pick and shovel play for this industry. It's actually in the application of AI is where it's got all its advantages from. Do you know what I mean? We've been waiting for winners to emerge from the AI space in how they apply the technology, not that they facilitate it. Emmett, how are we doing?
Good morning, Mike. How are you doing today?
Not too bad. Awful night's sleep after the first night that it gets above 20 degrees in Ireland, you know?
Oh, yeah, I know. Well, we were just talking before we went live there. What did you say it's in Biarritz today? What's the temperature?
39
Oh,
yesterday.
that's
Yeah.
ugly. What's that in American money? 39, probably around 100. Nah, about
I think
95.
I think it's above 100. I'm not sure exactly. I know the formula is for every 5 degrees above zero is the same as 9 degrees above 32
Hmm.
in Fahrenheit. Does that make sense? So,
Yeah, and
like,
then you
say so.
differentiate it with respect to you have third
but,
order nonlinear differentials and then multiplied by pi. I used to know it down, but it's kind of it's just slipped away. It's something I rarely use.
Yeah. So, like, say 41 is 5 degrees, 50 is 10 degrees, 59 is 15. So you build it up like that and you can figure it out. But
Are the Irish system? Jeez, very hot. Oh God, it's terrible. Oh God. Oh geez, your
it's
mammy's.
probably
Oh,
too
your
hot.
mammy can't
Probably
cope.
too hot.
Can't cope. Your mammy can't cope. It's just like that's really hot. That's late 20s.
We're not, this isn't a podcast about degrees in Fahrenheit versus Celsius, but someone made the argument, and it actually makes sense as well, that because Fahrenheit seems so ridiculous, but from 0 to 100 on Fahrenheit is kind of a very human, um, humans can accept this temperature, and anything outside that is like dangerous.
Well, that's the
And
first
that's
argument
what,
that makes
that's
sense that I
the,
heard.
that's the scale. That's kind of
Ah.
why.
You wouldn't think I studied the physical sciences and the measurement of anything. But that is a very logical explanation for Fahrenheit, because clearly degrees, it's freezing, boiling, and then they split it into 100 parts. And that kind of makes sense, but it doesn't make sense to the human being. Like the fact that our bodies malfunction what's the body temperature? 36.6 degrees or something like that.
Something around that, yeah.
So by extension, then, does that mean that's 0 degrees Fahrenheit? No.
No, that would mean that would be close to 100 degrees.
Oh, yeah. Once you go, yeah, sorry, yeah,
Yeah,
of course,
yeah.
sorry, yeah, exactly. Sure, we just spoke about the weather. Of course, you're right. So once you go over that, body's in trouble.
Pretty much, yeah. So
Tune in
that's
next
the.
week, folks, for as we stumble our way through,
This
stumble
will
our
be
way through more obvious things for you to listen in on.
this will be an ongoing thing on the podcast where it just becomes a
Yeah,
larger and larger part of the
yeah. Like
entire
what next week?
conversation.
Why is the sky blue? Well, that's a good question, and I'm not sure, but let's
Yeah,
figure it.
we give 5 minutes for stocks at the end.
Well, we have an exciting show, Mike. Apart from the fact that you are going to cover Applovin, a stock that's gone to the moon in the last year, I'm going to talk about a stock that I have bought, or I'm going to buy today, that's microcap and listed in the Polish Stock Exchange. It couldn't be any more hidden, yet I think it's going to grow 2x in the year ahead and possibly 3, 4, 5x in the subsequent years. So there's a good show ahead of us.
Absolutely, yeah. We got an announcement though before we kick things off. Do you want to
Oh,
take
yeah,
that?
yeah. I have two things to say. This day next week, Thursday, 21st of August, we're holding the very first Investicon in collaboration with the Aer Lingus College Classic, which is an American football game between two long-standing rivals, Iowa and Kansas State colleges.
No, Iowa State and Kansas
I
State.
said that.
Yeah, but it's not Iowa. But apparently, that's
Oh,
a
I
big
said,
no-no.
oh, sorry. I said Iowa and Kansas State colleges.
Yeah.
So
Okay.
Iowa State and Kansas State colleges. Got you right.
I've been
Okay, the
I've, I've been
nuance is
I've
fine.
been told to not call them Kansas and not call them Iowa. So I'm very
Yeah,
I'm
Anne
very on
Marie gave
edge
us
when
the
it comes to
warning.
that. Yeah.
Yeah, but still, I slip back to my old ways. I'm so familiar with both states. So anyway, Investicon. Investicon is on the historic floor of the Irish Stock Exchange and has a range of world experts giving their top 3 investments in short 30-minute fireside chat interviews. And attendees will walk out with the name of about 18 or 20 actionable investments, from collectible whiskey to super high risk, high reward potential 100 bagger stocks. That's stocks that are positioned to grow 100-fold. So go to investicon.ie and grab one of the last 7 tickets today. The second thing I want to say, Mike, well, actually, I'm going to say 3 things wrapped up as 2. We won't do a podcast next week because it's Investicon week and you and I are going to be flat out. So sorry, folks. This is the last you'll hear from us on matters of Fahrenheit, centigrade, and blue skies for at least 2 more weeks. The other second thing I wanted to say was that if you have not signed up for 3 free months on Profit, you're mad in the head. You should be locked up for crimes against wealth creation. Let me tell you the numbers about Profit, which will immediately cause your eyes to glaze over because people don't like numbers when they're read out. So our system, Profit, which has been so excruciatingly, is there such a word, devised over 16 years, has had an annual return of 18.7%. It has a Sharpe ratio, which I'm not going to explain just today, of 0.6737, with a standard deviation of 25.9. So people are like, what? Wake up, everyone. Let me tell you this. While others are chasing short-term noise, Profit locks you into a proven large cap momentum strategy that's designed to crush the market over time. It has crushed the market and will continue to crush the market. Now, with that said, it's flat this year, and that doesn't mean it stays flat. This system works, so it's a lovely time to start. Unlike the rest of the stock market, which has been soaring, this has kind of sat flat. But with 16 years data, 6 months doesn't matter. It doesn't matter a tot. So miss a month and you could miss the move that makes your year. So go to useprofit.com/MWS offer, my Wall Street offer, MWS offer, for 3 free months before we pull it soon.
We'll have the
Mike.
link in the show notes, but actually it's
Oh,
important
yeah.
to say as well, profit,
Oh,
prophet.com,
yeah.
just in
Yeah,
case you're listening to this and
exactly.
you don't check where this podcast is listed to.
Like your
So
favorite supernatural deity. Okay, so choose who you most love, and that's who you have to think of. Okay, so Applovin. Mike, talk to me about Applovin, a name that always kind of annoyed me, but that's not a stock analysis. So tell us what happened. What's it? Tell us all about the business.
yeah, maybe this is the hottest stock in the market. Up about 500% in the last year, up nearly 5,000% since December 2023.
Wow.
This is not a good stock for me to check, because one of my bad habits is I'll always go to the absolute like nadir and be like, geez, imagine if you just invested right there at the absolute perfect time. You'd be
Yeah,
up 50-fold since.
that's right.
Um, so yeah, I don't feel too bad about missing this one, especially not missing it into 2023. I kind of always remember this stock, and it never really. It kind of had a hot IPO there post COVID time, maybe, or had a run anyways post COVID time, along with everything else. And it was one of these kind of game developer app development kind of stocks that just didn't really seem to have any X factor at all. And in fairness, like that's how the story goes. But what it's turned into, and what it's completely transformed, is into one of these stock stories. I believe that we're going to see a lot more of in the coming years, because this is a company that's kind of upended its entire operations with AI,
Right.
and in such a way that's different from, say, the chip makers or the data centers. In so much as it's not benefiting from the infrastructural build out of AI, it's not a pick and shovel play for this industry. It's actually in the application of AI is where it's got all its advantages from. Do you know what I mean? We've been waiting for winners to emerge from the AI space in how they apply the technology, not that they facilitate it.
So let
And
me hit pause for 1 sec, Mike. If I was your grandmother, how would you describe what Applovin does? Not to cast disparaging remarks on your grandmother's intellect, but seriously, what do they do?
okay, well, first I'd get the Ouija board out, because I think that's the only way I'm going to be able to talk to her.
Oh,
But
Mike, I didn't know. I'm very sorry to hear.
don't be sad.
Irish star now to get a mass card.
This is okay. But essentially, and this is going to be difficult because this is a real test of how well you know something, is if you can
Mhm.
explain it simply.
Yeah, so true.
But Applovin used to be a mobile games developer that had an integrated ad platform built in. So it would build these apps, it would have these, and then it would sell ads through them. Essentially,
Through the
it
games.
yeah. So
Right.
it completely gave up. It sold out in Q2 there. Its game development arm
Mm.
completely for about £1 billion, maybe. I think it was 900 million, to focus solely on its ad platform, which
Okay.
has become in the last 2 years one of the most profitable ad tech platforms in the mobile ecosystem. It's been an incredible turnaround.
So it's
And
like the
so,
trade desk, but for computer games. I mean, say mobile games.
essentially, yeah. So it's all built in within say the software of, if you started Emmett's stock race, you would just download a piece of software from Applovin, put it into your app, and then they would do everything else. So
Great analogy. I did that. It was called the Invest app. And we spent 1 billion building it, and it was the greatest thing ever. Only it needed 1 million a minute to keep on air.
so it's all built around this, what it's called, is Axon. It's AI
Mhm.
powered engine, and that
Huh.
can target, optimize, and monetize users better than basically any of its peers. And that's what's the excitement around this stock has been from its results. Not only its results as in its financial results, but the results it's getting for its clients. Um, and it's interesting. It's not that it's a forgotten market, but it's definitely an underestimated one. So the Wall Street Journal wrote a piece, started this year, saying, "Is app love in the new TikTok?" Or
Wow.
paraphrasing that. But did you know there's more than 1 billion people a day who use mobile games? 1 billion daily users, like.
I'm not shocked. I mean, I didn't know that, but that sounds about right. 1 in 7 people. Yeah, when I walk around, I see 1 in 7 people
Yeah.
playing.
But that's
Yeah, I
I,
hear that is interesting though.
like that's a similar audience to TikTok. It's a similar audience to Facebook's apps, and yet there's no. And it's probably because it's not consolidated within one, big player. It's all over the place, and it's such an there's not a lot of barriers to entry compared to the social media aspect. But the sheer volume of eyeballs there is nuts, and yet the mobile games ad market in particular, it was always underutilized, mostly because all the ads were ads for other games, because the only thing advertisers knew about the user was that they played mobile games. Do you know what I mean? It was tough
Mm,
to
mm.
glean more information like you would from someone's social media habits, where they would click on a golfer's page and a runner's page and be like, okay, this is clearly a man and clearly likes sports and X and Y, and now I can sell him, you know, new shoes or whatever else. The basic kind of glean information and then process it to provide a targeted ad. The games industry never had that. So what Applovin was able to do with its AI system was build allow game advertisers to expand to other industries, instead of just say, you like this game, what about this game? We know enough about you now to say, you like this game, here are a pair of earrings you're going to love, or whatever else. So
Yeah.
it's oversimplifying it, but like the model collects data on users and includes what the advertisements they're engaging with as well, and then they
It
use
makes
that data
sense. I mean,
to
it makes
tailor other
perfect
ads to
sense.
them.
Yeah.
And this is what Facebook kind of, I don't know if they invented it, but they perfected it with their thing. Facebook's ads became so efficient because of the data they were able to collect
Mm.
and then deliver optimized ads to people. So we talked about how developers essentially integrate AppLovin software into their own apps, and then AppLovin handles everything. It does the ad auctions, the placements, the targeting, and then the more effective it is, obviously, the more money everyone makes. So it's a win-win, because obviously AppLovin takes a little bit off the top, but the developer and the developer gets more from advertisers, and the advertiser actually gets more ROI as well. Then, um,
Do you know, many moons ago when I founded my Wall Street first, we had on our board Professor Barry Smith, who's head of, I think he's the head of School of Computer Science in UCD in Dublin. And he is a leading expert on recommender systems. And
yes,
at that time, I remember him explaining to me that when you go into Amazon to buy I don't know, a colander to drain your potatoes. You might see you might see in your line of sight a book on bridges, which is absolutely nothing to do with colanders. But what in fact it's doing is it's telling you that you can buy a book about bridges on full knowledge, if you like, that you are not there to do that. But at a later point in time, based on your behaviors, there is an outside chance you'll want to book on bridges and you'll think of Amazon. And he explained about recommender systems in great detail to us, John and I, over uh, the subsequent years, because we really wanted to build a system that if you bought shares in Tesla because you loved it, there's a high probability that you would also want to own shares in Lululemon. Now, as you start to drill down on the assumptions below that anecdote, you start to find where trouble will unveil, which means that just because you like something doesn't mean it's a good investment. But if you look at something like your stock portfolio should be a I guess, biography or autobiography of your beliefs. That's where we were going on that particular one. But it seems like Applovin has actually built an add-on, a piece of code where we could have just dropped that into our app, but for a different purpose.
Yeah, what's interesting you talk about recommender systems. I always remember we had your man from TikTok come into my Wall Street to talk to us once, and
Oh yeah,
it really opened your eyes. Like if you compare, say, you talk about recommender systems, and you talk about what the end user gives back in terms of data to the advertisers. So if you're watching TV and you watch an hour of a show, you watch an hour of a monster truck show,
yeah,
the advertisers will have one piece of information on
yes.
you
Hmm.
about that you like monster trucks, and they can glean X and Y out of
And who
that.
doesn't? I mean, monster trucks are great.
If you watch an hour of TikToks, you've scrolled through, I don't know, 100 short form videos. You skipped
Yeah,
ones you don't like.
that's right. Bookmarked, forward
You've
them.
stayed on ones you haven't. You've shared ones you really like. You've
Yeah.
saved ones you want to come back to. All that stuff, and the amount of information is just amplified to another level. And I think this is where the flywheel comes in with all of these things, with the recommender systems, with the sheer, and we now have the technology to process it to another level with AI as well. And this is what Applovin has done. So it's kind of a flywheel essentially,
Hmm.
where if Applovin runs ads across thousands of apps, it collects all this ridiculous amount of performance data. Data then trains the AI, which improves the ad targeting more, which then brings in more advertisers, and kind of on we go. And it's the scale advantages that these systems can have and build and become so hard to topple then as well. And what's gotten investors even more excited is that the business has great intentions to expand beyond apps to e-commerce businesses as well. I think as it stands, e-commerce accounts for about 10% of sales. But again, if it can recreate the effectiveness of its model to the wider internet sales, it could really blow up. So the company estimates that advertisers on the platform see a 2x revenue return on spend.
Really?
So essentially, how good of a business model is that? Like, give us €1 and we'll give you back two. You know, is that the easiest trade off of all time? So again, if it's able to recreate that success in other areas, there's huge potential, and it's no wonder why Wall Street's gotten so excited. And then on top of that, the numbers have been absolutely outrageous. So
Mm.
just we were kind of talking about it today. We're a year late, but I don't feel too bad about missing this from the start, but
Yeah,
we
tell me
probably
why.
should have been talking about it a lot more in the sense of this is one that's been this one has been humming along for a while now. But just the extent of the numbers in Q2 last week were outrageous. So revenue was up 77% year over year. Net income was up 164% year over year. Adjusted EBITDA was up 99% year over year with a margin of 81%. I'm not really sure I've seen an EBITDA margin of 81% anywhere.
Hmm.
Um,
No.
Net margin was 61%. Free cash flow was up 72%. So just the sheer scale of how fast this company has transformed itself, transformed its margin profiles, the amount of money it's making. How good of a business model has an 81% adjusted EBITDA margin? You know what I mean? And like that's I think doubled almost year over year. Um, there's very few businesses that can double their margin profile. So it really, really is an interesting business. And then there's just a little cherry on top to this whole story. And I think it's very tongue in cheek. And I think it's maybe more of an advertising play and a little pat on the back for yourselves than anything else. But in May of this year, CEO Adam Farahi, he wrote a blog of their pitch to buy TikTok. Did you hear this?
No.
Yeah. So I'm going to quote him now. It says, "Our proposal isn't a buyout. It's a merger with TikTok Global, covering all assets outside of China." And it's a really good piece. I don't think it's serious. But, and I don't think they can pull it off at all. I think he kind of admits that as well. He gives a little proviso at the end. He says, "Let's be clear, this is a long shot. But building one of the world's best advertising AI models was also a long shot, and we did that. We're not here for small bets. Our goal is to build a massive business that creates value for the world and our shareholders." And then he says, "Yeah, look, that's it. Our core business remains our focus, yada, yada, yada. We're not all in on this TikTok thing." But I loved what he wrote down, because essentially what he's saying is that, if we're calling it like we see it, a business like Applovin would add way more value to TikTok than if something like Oracle did it, or Larry Ellison, or whoever else. And personally, I don't really believe TikTok is going to get sold in such a way. They talk about it a lot. I think it's just going to be this ongoing quagmire with political kind of positioning and all the rest. But I love the pitch Applovin gave, which is just it's just a complete advertisement for itself. Do you know what I mean?
Yeah, yeah.
So he titles his first title in the blog is "The Performance Advertising Gap," and I'm just going to read it out because it's better to read it out than me to paraphrase, anyways. So he says, "On mobile, where users spend 4 to 5 hours daily, platforms like TikTok, despite incredible engagement, fall short on advertising performance. TikTok boasts around 1.1 billion daily users outside of China, yet its ad monetization is well below Meta's. Why? We believe current restrictions and concerns around data and security severely limit its ability to refine its advertising algorithms needed to maximize revenue. The economic loss is staggering. There have been reports that TikTok did around 20 billion in ad revenue outside of China in 2024. If powered by our cutting edge technology, which quadrupled advertiser spend on our platform in just 2 years." So there you go, a little pat on the back for yourselves. "We believe that it could reach 80 billion. Based on our experience, advertisers see over 2x revenue return on spend. That's 60 billion in lost ad revenue, translating to 120 billion in missed revenue for businesses. Think about the jobs that could have been created. TikTok excels at AI. Their recommendation algorithm is world class and one of the first massively scaled implementations based on modern understandings of neural networks. Yet data and security concerns have hamstrung their advertising potential. Without a change in control, they may never unlock this value. That's where we come in." So obviously he's talking about a lot of other things as well, in terms of kind of how TikTok has been limited and how there's very real concerns about the China influence over the app and all the rest. But he's also saying we are the tits. Look at how good our advertising model is. There's 100 billion quid left on the table for your advertisers because you're not using us because we're so good. I thought it was cool.
Yeah,
I
and
think
actually, it's very coincidental with something my wife pointed out to me last night, where the founder of one of the other big LLMs, not ChatGPT, but it may be Anthropic or one of those other.
Anthropic or
I can't remember which one.
Perplexity,
Oh yeah, Perplexity. I think it was Perplexity put out a
the bid
similar.
for Chrome,
Say again.
the bid for Google Chrome.
Correct.
Yes, yes, yes.
Yeah, exactly. So I mean that what both of those stories, they're remarkably similar, but what this shows in both cases is that the founders thinking very, very big
Yes.
and has widened their chest and their shoulders are back and they're pushing their way forward in a way that you just have to take notice that, like, whether or not Applovin acquires TikTok, and I think most of our spider senses would say that's not going to happen, and the same for the acquisition of Google Chrome by, is it, who did we say it was?
Perplexity.
Was it a Perplexity?
Yeah.
That you just there's a thinking big, there's almost an arrogance to it, and we don't
Yes,
see it, we
exactly.
don't see it happening, but it shows that this founder is thinking the way we want our founders to think, and it causes you to double down on the belief that this business is going to get to a bigger, better place, maybe not through that route but through another.
Yeah, it's what he said. We're not making small bets here, you know,
Yeah,
and
yeah,
and what we've already done, it
yeah,
should prove that to some extent. So
yeah, yes.
yeah, I think it's really interesting. I'm obviously very impressed. We were talking about falling knives last week with Novo
Mm.
Nordisk. What's the opposite of a falling knife? Like chasing returns.
Geez, you think I'd know after all these years of
Yeah.
talking about it is I don't know, a rocket ship on.
Elevating spoons or something. But I
Nice. Trademark that.
yeah, it's fascinating business, and I think there will be a lot more of these types of businesses. Well, we're already seeing certain businesses like it was Upstart and Lemonade were built with AI at their core. This is a business that took AI and absolutely optimized everything within the business. And there's going to be other businesses that try to do that as well. What's the is it Klarna, the buy now will pay later
Yeah,
that
yes,
was like
yeah. Yeah.
we're doing everything AI. We
Yeah.
are
Oh
open
yeah.
AI's guinea pig. I think there'll be
Yes.
more businesses like that will try to do something like this. Now, obviously, Applovin struck gold. I don't know if that's not them just like cutting costs through AI. This is them actually figuring out an entire new system, essentially. But yeah, I think it's interesting, and I think this is what a lot of analysts have said in terms of long term. It's not the people who build out the architecture of AI; it's going to be the best users of AI. And AppLovin is kind of one of the first companies to put their hand up and say, yes, that's going to be us. So interesting business. I don't think I would touch it at the minute just because
Yeah.
it's on such a white hot run. But again, it's also catching up to its valuation every quarter, as well. So
But
yeah,
that's very interesting. Of all the things you said there, and you said a lot of interesting stuff. The one that really I kind of double clicked on in my mind was the fact that you said while you looked at it, you don't regret missing it, which shows.
I don't
And
regret missing because I think we looked at this stock back in 2020,
oh, I know we
2021.
did. I
Yeah.
know as a fact. I have notes on it. But the there's a lot to unpack in that statement. I'd love to go there. It's the hindsight regret. Most of us look at a stock that's grown 1, 2, 3, 10x. And if we looked
Mhm.
at it at some point in the past, irrespective of what we
Oh
thought,
yeah, it's
you feel regrets like,
burrowed
oh,
a
I looked
hole,
at that, I
100%.
knew, but you didn't know, you
Yeah.
didn't buy it. Um, I am my life, my investing life, the path of my investing life is littered with I don't want to say regrets, but stocks I looked at that went on to hyperperform, and it's very important to keep in check that feeling of regret because every day is day zero. Today is day zero. For all our listeners, this is the first day in your investing life because what happened up until this millisecond is irrelevant. All what that matters is what you do now. And if you keep that in mind, at least you're setting yourself up for some kind of uh, good temperament going forward.
Yeah. Yeah.
Okay,
Okay.
so Applovin, that's interesting. Another takeaway is I'm going to have a look at that from my Wall Street. I'm meeting our CMO after this, and I'll go, hey, why don't we look at Applovin? So, yeah, interesting.
All right. What do you got for us? Very different business, I believe.
It's entirely different. And I'm going to talk about, as I teased at the top of the show, microcap stock that I'm going to buy this morning. I was on to my Irish broker called Davy yesterday to get it added to their platform. It's such a difficult stock to buy, and they don't even allow you buy shares on Warsaw. So I had to ask for the listing to go up there on the Berlin Stock Exchange. They have a secondary listing. So apart from it being a micro cap stock, and apart from its primary listing being on the Warsaw Stock Exchange, which only a handful of online brokers like Interactive Brokers allow you to get access to. As I said, it has a secondary listing in Berlin, and that's where I'm going to buy it. And the reason that that's a risk in itself, micro cap risk number one, the reason non-US exchanges is arguably a second risk is that the governance on outside of America is arguably less thorough than in the US because they have this thing called Sarbanes-Oxley in America, but it doesn't exist outside of the US. So risk multiplied by risk equals white hot. So I'm about to talk about something that's so risky, so out there, You just have to, as they say, caveat emptor, just listen to the words, don't get excited. But I am putting my money down because I honestly think it's going to 2x within a year to 18 months. And honestly, folks, this does not constitute financial advice, because I play hardball with risk in the knowledge that I get about 1 in 8, 1 in 7.7 very right. And that's where the rewards lie. So this could be one of the 7 where I'm wrong, right? But I don't think so. But it might be. Anyway, I think everyone knows EA Games, the company behind FIFA and Madden, NFL, and The Sims, because this company has been a zeitgeist for 2 decades, at least probably 3 decades, building annual franchises that are part of pop culture. Then there's Activision Blizzard, which is best known for the Call of Duty. What else do they have? World of Warcraft, Skylanders, Overwatch. They're another games developer, and it's mastered the art of combining huge day one sales with then years and years of long tail monetization through expansions and seasons and all this kind of carry on. And as discussed, I'm sure, on this podcast in the past, Activision was acquired by Microsoft, which gives it that extra firepower and distribution, Game Pass integration, etc., etc. But it's not about EA Games. It's not about Activision. And it's not even about my favorite, which is of the big three, which is Take-Two Interactive, with its crown jewel, Grand Theft Auto, Red Dead Redemption, and then its NBA 2K series. And even just while I'm on Take-Two, GTA 5, GTA V, sold over 200 million copies of the game, and it still generates millions a day in microtransaction through GTA Online. And then GTA 6 is slated for release later this year. And I suspect it's going to make Take Two. Take Two will have the biggest game launch in history with that. So there's three big names. I have owned shares in those three companies for prolonged periods over the last 25 to 30 years. And I'm back on the industry bus, but my latest purchase is almost unheard of Polish developer of games, computer games, and it's called 11-Bit Studios, which looks to me like an undervalued game maker with two engines for growth, which I'm going to pitch on this podcast now. So this Warsaw based developer has a reputation for building these really kind of smart games where you get involved in the story and there's a strategy, and the story unfurls based on the decision you made. It's not your typical single person shooter up or whatever they call those games. It's a very strategic. They build strategic titles that stay relevant for years. And the game that put them on the map, which I'm pretty sure 99 plus out of 100 people who listen to this podcast will never have heard of, is called This War of Mine. And then they came out with a game called Frostpunk, which made them a global name in strategy gaming. And anyone who's into gaming will know Frostpunk, maybe less so This War of Mine. And they've just released a new game called The Alters, which is proving they can launch a new franchise with really serious commercial potential. So let me explain. Right now, the stock values the entire company at about 100 million euro, or about 120 million US dollars. For a studio with two major hits in the pipeline, one proven and the other brand new, that looks like a bargain. The Alters is brand new. And the next 2 years could be a turning point when the market finally catches on. So 11-bit isn't like these giant publishers that I mentioned at the top of this piece, which turns out multiple games a year. They take a very slow and deliberate approach, probably because they have to manage their resources, their developers, their capital, their launches, and so on, as it goes with a smaller studio. And usually they have one or two key launches in a development cycle, and they focus on very high quality but mid budget games that deliver a better bang for the buck, if you like. So it's a formula that worked with This War of Mine, where millions of copies were sold, with lots of downloadable content that you pay for and bundles, and then Frostpunk 1, which remains a strong seller years and years after launch. So growth driver number one is that Frostpunk 2 is going to be huge. It was released on PC in September 2024. It sold 350,000 copies within days and hit almost 600,000 sales by the end of the year. And it generated about 18.5 million US dollars before touching the console market, the PlayStation 5, the Xbox latest thing, whatever the latest Xbox is called, Xbox 5, let's call it. And nearly half of the buyers in the computer realm paid for the deluxe edition, which had a higher revenue, average revenue per user. But that's really just the warm-up act. The console launch, PS5, the Xbox latest box, is coming in September. Just a couple of months away. Where are we at? August? Next month. I had to check what month we're in. How privileged is that? So next month, they're launching Frostpunk 2 for PlayStation 5, and this is going to open the doors to millions of more players, needless to say. And a Game Pass deal also ensures a massive audience will at least try it, which will drive both DLC, downloadable content sales, and also the franchise recognition. And then from 2026 onwards, excuse me, and then from 2026 onwards, if Frostpunk 1 is any guide, and it certainly is, we can expect years of post-launch monetization and expansions and stuff you buy when you're a gamer, cosmetic packs and seasonal content and all that kind of stuff. So there's a long tail sales on these things with bundles and all types of seasonal discounts that's going to sell well into the late 2020s and possibly into the early 2030s. So Frostpunk 2 is set to be 11-bit's primary profit engine from pretty much now, from the late 2025 through to at least 2027. Multi-platform reach, loyal fans, and a proven game that people actually love. And that could generate between about 60 to $100 million in revenue over its lifetime. Now, just again, if I may remind our listeners, the current market cap, which is its total valuation, is in that ballpark today anyway. So if Frostpunk 2 generates, let's just say 100 million in long-term tail revenue, the entire market cap today is about 120 million. So the second engine for growth that I've bought into in my internal narrative, and the reason I'm buying shares when the market opens today or after this podcast, is it's launching a brand new franchise, and which is always risky. But this game, The Alters, has really hit the ground running, and it was released just 2 months ago in June, and it's a survival strategy game with a real unique hook that you create all alternate versions of this protagonist, and each one is shaped by different life choices, and based on the decisions you make, the game takes a different direction. I guess that's where the name The Alters has actually derived from. That is all these alternatives. So what matters, just like a movie, what really matters is, do people love it? Because you could, in just to bring it over to the movie world, you could have the world's best director, scriptwriter, cast, and movie, and produce a flop. Because what really matters is, do people like it? And a lot of us jump on to IMDb to see if a movie is worth an investment in our time when we're about to sit down with family or friends to watch a film. Well, Metacritic is where you go. It's the IMDb of the gaming world, and its score, the score for The Alters is 84 out of 100, which is absolutely amazing. Like, if you take games that my son would play, like Assassin's Creed, which is a really well-developed, beautiful, engaging, aesthetic game, it scores kind of low 70s. So The Alters is up there around 8. Actually, it scores in the high 60s. So The Alters is up around 84 out of 100. It's had 280,000 copies sold in the first month on PC, Xbox, and PlayStation 5. And the Game Pass impact means that it has huge reach and already has 1 million stream wish lists on Steam. So financially, the first month revenue is estimated from The Alters at about $5.5 to $7 million, which is not huge money. But let's just remember, this is a teeny weeny little microscopic speck in Poland on the Polish Stock Exchange, the Warsaw Stock Exchange. And by mid-2026, the game could reach around, I reckon, 500 to 600,000 units sold, which would translate to about 10 to 15 million dollars in revenue, and the long-term sales are probably going to go up to around 700,000 sales. Thanks, I got a little bit of help from an online forum to understand what its long-term sales will. And so that's just the first one, the Alters 1. So the Alters 2 could realistically double those numbers, especially with a simultaneous multi-platform release, which these guys are getting better at, and that would give 11-bit the reliable second franchise alongside Frostpunk, so Frostpunk 2. So just as I kind of try and land this sprawling argument that I'm making for a business that I'm sure most people have never heard of, is that 11-bit secret weapon is how well they convert critical praise into commercial success. And it's really important for game studios to do that. So the numbers really tell the story. Frostpunk 2 has scored 86 out of 100 on Metacritic. The Alters, as I said, is in the same ballpark, and the Steam reviews are very positive for both titles. And what those high reviews basically mean is that games hold full price longer before they're discounted. So, when you go into GameStop or Smith's Toy Store or whatever your local games place is to buy a game, you'll see that discounting happens. And what was a great title 6 months ago, if it just isn't holding up on great reviews, you'll see it down half price. They just want it off the shelf. And then downloadable content and sequel updates are stronger. So it's the same quality compounding effect that kept this War of Mine and Frostpunk 1 selling for years after launch. And I've seen it over and over with EA Games, with Activision, with Take-Two. As I said, I've owned shares in all of those. And it also has 11-bit also has a really nice pipeline of other games. There's a new large-scale original title being developed. They haven't given a whole lot of information, and it's coming out in 2029. Now, if you're going into long-term buy and hold as I do, that's like tomorrow. I mean, to me, 2029 is September. I mean, whatever. I'm buying it. I'm leaving it there. So, so here's the thing before I shut up. Despite this really strong creative track record, 11-bit's share price has been slammed. So I say to our listeners, just look at 11-bit's share price on Warsaw and Berlin, and you'll see a cliff edge. And that's because they had a $12 million write-off by cancelling a project called Project 8 with a whole bunch of layoffs. Now, no point in even describing what Project 8 is because they've canned it. So, but what happened was the market didn't like it. Shareholders didn't like it. They dumped the stock. They had publishing misses, which is kind of par for course in the gaming industry. Like Grand Theft Auto 6 has just taken like forever. It just, whenever they say it's coming out, you can just, it's like the Irish Children's Hospital. Only Irish people get that. So it's publishing miss. So games like The Invincible have underperformed, and then revenue is lumpy. So all in all, we're looking at a business that's been maligned, and mid-cap gaming stocks have also been under pressure globally. So all of these issues are temporary and have created a much cheaper entry point for investors who believe in Frostpunk 2, and that the console downloadable content cycle is going to be good for it, and the Alters long-term potential, which, as I said, I most certainly believe in. And so what I'll just wrap up before I hand back to you, Mike, is that the base case revenue forecast that I've scribbled down here, and you know me, I don't generally put, I did a master's in finance years ago. We're doing discount cash flows and this, that, and the other, and putting on price targets. And the one thing that everybody, if you keep your discounted cash flows for years and do loads of them, they'll uniformly all have one attribute: you are wrong in all of them. And there's a good argument to say, well, you should do one anyway, and that's fine. But if you look at the things we speak about week in, week out, the right side of the brain, the qualitative judgment that you make on a business is more often going to be right than the quantitative where you do a DCF. But anyway, but the base case is, I reckon, when it comes back to 11-bit, that they're going to do about 40 million in revenue this year between Frostpunk 2 and PC sales and the Alters launch. They're going to do about 40 million in revenue this year. Easy number to remember. Next year, I reckon they're going to do about 55 to 60 million in revenue, because it's going to be the first full year where Frostpunk 2 was out on all platforms with the downloadable content. And I reckon they'll do kind of the same ballpark the year after, around 50 to 55 million as the franchise tails off and they're kind of gearing up for new releases. And with margins historically at around 35%, 2026 earnings profit could hit about 17, $18 million. So if we apply a 15x PE, which is pretty much reasonable for the industry, it values the business at $264 million, which is more than double today's market cap, which is why I believe it's going to be a two-bagger. Any questions?
Yeah, I mean, it's funny, these game developers, we've seen a lot of them, and how dependent they become on singular titles. Like, we've even seen
Yeah.
that at Take Two scale.
Yes.
And so when you shrink that down to 11-bit studio scale, it becomes even more and more pronounced how dependent they are on their big names. And like, say, I'm just looking, like, if what is it, Frostpunk
Frostpunk.
2,
Yeah.
Frostpunk 2 comes in, and not even like just like absolutely like, was a profitable business, but didn't reach the heights of, say, Frostpunk 1. And it's like the house is on fire. Do you know what I mean?
Yeah,
And
that's
then,
right.
then
Yeah.
and then you bring in something like the next kind of successful franchise, potentially in Alters, and it's like, okay, now here's this big potential turnaround again. So it's
And
what
you're
you were
right.
saying
That's
at
the
the
risk.
start.
That is the
White
risk.
white hot risk for
Yeah.
sure,
Oh,
but
yeah. Yeah.
you can very much see the route to success as well.
Yeah.
And I think that's important for very risky stocks. Is like, yes, I'm very aware of the risk, and like, I've seen the risk play out. The stock is down huge in the last year, but I have a very clear line of what success looks like as well. Do you know what I
Yeah.
mean?
Yeah. I
And
do
so
very much
I
so.
think it's a very fleshed out investment pitch for something that is incredibly risky, but you've given your clear reasons why, and you've explained, say, why the company has fallen, and maybe there's a turnaround in terms of sentiment on certain titles as well. So like Frostpunk 2 may be disappointed, but how does the console release go? Here's
Totally.
Alters now.
Yeah.
Exactly. So yeah, I think it's an interesting pitch. We went very different directions for
Oh, we
this
did.
episode. I was like 150 billion dollar hottest stock in the market to a tiny microcap in Poland that no one's ever heard of.
I can think of at least 3 podcast listeners who could buy that whole company and not feel it. Like, I mean, that's how small it is. But of all the things I said, and I spoke about why their stock was clobbered and the new titles they've got and the franchise that they're building with Frostpunk 2 and the Alters and all that stuff. The most important thing I said was the reviews, because that's really all that matters. Because people who buy games before they drop 50, 60, $100 jump on to see what do their fellow gamers think. And those reviews are absolutely glowing for the 2 titles that are just coming out of the traps now. And for that reason, I believe they'll meet their sales targets. And I wouldn't say for no other reason, but that is the lion's share of where my belief is coming from.
Okay, good stuff. I think we're good to end it there. Just a reminder, folks, so we're not going to be here next week. We are going to be live and in person with Investicon. 1 week out. Very excited, Emmett.
Oh, it's going to be brilliant. And yeah, yesterday you and I were saying, right, okay, who's interviewing whom? And it's just brilliant because we're going to keep it so sharp and snappy. No glazed eyes will be happening in the Irish Stock Exchange this day next week, 21st of August. 7 tickets left, buy one today. And like we are going to hit, as soon as the speaker's on stage, we're going to be, hello, how are you? Tell us why you're great. And then we'll interrupt them to go, okay, what's your first investment and why? Because these people really have great expertise. I'm very excited about the whiskey. I'm very excited about having Peter over from Compounding Quality. I'm very excited about having 2 luminaries from Kansas State and Iowa State colleges from the investing world. I'm excited about the fact that Eric Bleeker is going to bring, like, this guy has the Midas touch when it comes to AI investing, and I can't wait to hear what he tells us while you'll be interviewing him. And then it'll be to the bar, and we're going to make sure we're building a very special community. So for God's sake, folks, buy one of the last 7 tickets. You'd be mad not to. And sign up for profit.
Absolutely. Everything
And
will be
mow my
in
lawn.
everything will be in the show notes, lads. But no, it was
Yeah.
it's a great episode, and thank you for joining me. And thank you everyone for listening in. We'll talk to you next week.